Well, hello, everybody. Steven Sitkowski here. I've got my voice back. Those of you that watch me every week, boy, I've had a couple of weeks of struggling. Gratefully feeling much better. So very thankful for that. Anyway, thankful to have all of you here. Welcome to this week's edition of Market Insights. Let's get to it. Boy, it's an interesting market out there. Just a complete lack of predictability right now. And that's kind of the hallmark of a news-driven market. You know, when you're sitting around waiting to hear about the next tariff announcement or adjustment or backpedaling or retaliatory action, how do you predict that? It's virtually impossible. Hence, very difficult to predict this market, but let's get all caught up. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. What's moving the markets? Well, we're still digesting the 90-day pause on tariffs. I suspect I should probably put the word day in there. What do you think? Otherwise, it'll bug me. So, as you probably know, the president laid out all these tariffs, said they're non-negotiable, and then a week or so later, they were suddenly negotiable after we watched the market fall some 15%. So that was kind of nice. I thought it was interesting that morning he came on and told people as it relates to stocks, buy, buy, buy. I don't know who he was talking to, but whoever bought ended up winning when he decided to pause the tariffs 90 days, except for China. So we've got China in kind of a special category in that we have decided, at least temporarily, not to impose tariffs on certain electrical products and iPhones, which has helped Apple stock. But is it permanent, or is it going to be just temporary? So that's the issue that we're dealing with. You know, it's kind of good news one day, bad news the next. Market goes up, market goes down. Like I said, very difficult to forecast. Uncertainty is the only certainty at this point. You know, in the beginning of all this, Goldman Sachs suggested that we would probably arrive at a flat 10% tariff across the board. That kind of looks like we're headed, with the exception of a potential trade war with China. So I don't know how it's going to play out. Neither does anybody else. I don't think the White House knows how it's going to play out. I know that they're trying to get concessions from other countries. I had a friend of mine recently asked, do you think it's going to work? And I said, I think it'll work on a selective basis. Universally, will it work? That I don't have a feel for. So the 10-year Treasury, you know, last week was around 4.1. Now it's at 4.4, but it had this run up, went above 4.5, and then it's backed off a little bit as there's been a bit of a less of a flight to safety, which is good for interest rates. Oil prices hanging out in the low 60s. You know, if you want to bet on oil going higher, because traditionally it's higher than this, there is an ETF, USO, that is a proxy for oil prices. So, you know, if you wanted to do a longer term call option on that or own the ETF, that might be, again, this isn't investment advice, it's consideration, might be a reasonable consideration. What to watch this week? Pretty slow news week. Not a whole lot to keep an eye on, candidly. Today, just let's Fed speak. Tuesday, we get import price index. Is that going to move the market? No. Empire State Manufacturing Survey, we already know that'll be bad. It's not going to do anything. Wednesday is fairly important. US retail sales. Let's find out if consumers are still spending money, right? Tell you about state of the economy. Business inventories, not a market mover, more Fed speak. And then, like we do every Thursday, we have initial jobless claims that'll be coming out. The Philly manufacturing survey, that's not going to move the market. So pretty quiet. The only thing I think that can be a genuine market mover is if we get some announcement on tariffs, which I wouldn't expect this week. There's really no reason for that. The announcement's been made. Last week's heat map, very encouraging. Some of the beaten down names like Apple and Nvidia, Broadcom came roaring back. Boy, Walmart has just been very resilient. I'm doing covered calls on it. About the only thing that didn't move higher was certain drug manufacturers. But other than that, everything was pretty good shape. 1 year heat map, much more of a mixed bag now. So we got Tesla up 43%, but boy, that has been a roller coaster. Walmart 56, Costco 33, Broadcom 28, Nvidia 21. There's Berkshire B shares been doing covered calls on it, and it has not disappointed. Utilities have been higher. Last week's big winners, basically gold and AI. So we've got Newmont, Broadcom, Constellation Energy. So that's primarily nuclear and data center. Palantir had a great week. GE, Vernova, NVIDIA, CrowdStrike, Humana, which is kind of surprising, KLA. Now, there's a whole lot of fear in this market, but believe it or not, fear may be bullish. So as you look at the VIX, which is the volatility index, as it gets extreme, and it did a couple of weeks ago, look what happens. The market generally goes up. It's sort of counterintuitive. And that's because when fear is high, all the selling takes place. And then once you run out of sellers, then generally the buyers step in and drive prices higher. So it's actually a bullish indicator. Consumer sentiment is awful. And who can blame the consumer? With all the negative news and all the uncertainty, fear of job loss has gone up. Fear of higher unemployment has gone up. Earnings announcements are going to start. Well, they started coming in last week. Goldman Sachs this morning had a beat. So that was nice. Mostly financials. And then on Thursday, we've got Netflix. Netflix has been a really good performer. Market sentiment has moved higher from 21 to 28%, but still well below the historical averages of 37.5% on the bullish side. On the bearish side, normally we're at 31%. Now we're at almost 59%. So again, a whole lot of fear out there. How much of the Fed going to cut rates? Latest and greatest looks like this. So we're expecting our first rate cut in June, another one in July, October, and then looks like not until January. So now we're forecasted 1, 2, 3 rate cuts between now and the end of the year. A lot of that's going to have to do with inflation data. Sector returns. This is year to date. So the S&P is off 8.6%, certainly has come back. It was down about 15%. So it was aided by a nice little spark due to the 90-day moratorium. But notice it's very defensive in nature. The positive sectors are staples and utilities. And the big losers are consumer discretionary and technology. So that's where the selling has been done. So that's where we sit, sector by sector. And let's take a look at the charts. It's the S&P 500 up to. Now we're again trying to fight back. So we dip below the 50-day moving average at 59.83. We closed all the way down below 5,000. And now we've recovered to 53.87. But we're way off the highs, that we're at about 61.50. But certainly that is encouraging. Again, but it's all news driven. So frankly, technical analysis in this market doesn't work. But I wanted to show you the charts anyway. Let's see if we can get, here is this little double bottom at about 5,500. So that would have been considered support before it broke through support. But remember, old support can become new resistance. So in order for us to start feeling better about things, we really need this market to close above 5,500 and some change. And we'll see if we're able to do that. All right. Whole lot of sitting around waiting to see if the next shoe is going to drop. But there are times when that's all that you can do, right? You got to take what the market gives you or recognize what it's not giving you. And right now, it's not giving us any certainty, but it'll be temporary. How long till we get certainty? I suspect by the time this 90 days is up, we'll have a much better sense of what's going to happen. Till then, we'll have a whole bunch of volatility. All right, gang, thanks for hanging with me. I will see you next week. Until then, be safe, be blessed. Bye for now.